Investment in China's property market fell by nearly 10% in the first 4 months of 2025 compared to the same period last year. That's according to official data. It comes in the wake of renewed trade tensions with the United States. But despite a minor drop in April retail sales, the economy showed resilience, with manufacturing beating expectations. Beijing has been seeking to boost domestic consumption to offset expected drops in exports. The US and China announced a 90-day pause in their tariff war last week, following talks in Geneva. Katrina Yu breaks down the numbers from Beijing.
China's economy is so far showing itself to be resilient in the face of unpredictable US tariffs. In March, the Trump administration imposed a 145% tariff on all Chinese goods going into the US. Despite this, China's industrial output for the month of April expanded faster than expected. It rose by 6.1%, beating expectations of about 5.7%. Retail sales, however, a key indicator for domestic consumption, missed its forecast. It rose by 5.1% compared to 5.9% the previous month. China's property sector also remains in a stubborn slump. Across 70 cities, new home prices fell by 0.12% compared to the previous month. Now, earlier this month, Beijing and Washington agreed to a 90-day trade war truce, slashing those previous reciprocal tariffs. All Chinese goods going to the US are now charged 30%, and US goods coming here are levied at 10%, down from 125%. Because of this, many investment banks have now raised China's growth forecast for this year. However, many people here still remain reluctant to spend and cautious, and we know this because bank time deposits reached an all-time high for the month of April. Katrina Yu, Al Jazeera, Beijing.
Andy Mock is a senior research fellow with the Center for China and Globalization. That's a think tank based in Beijing. He's joining us from Hong Kong. Thank you very much for your time, Andy. Good to see you. So let's break down the numbers even more. Perhaps we can start with the good news. Industrial output grew 6.1% year on year in April, and that is stronger than analysts' expectations for a 5.5% rise. What do you put that down to?
Well, thanks for having me on today, Elizabeth. So I think this particular number demonstrates two things. So one is the fundamental structural resilience of the Chinese economy. And a large part of that comes from an almost decade-long effort to prepare the country and the economy to harden it against exactly the kind of vicissitudes that we are witnessing that happened in April of this year with Trump's unleashing of this barrage of tariffs. So I think that's one thing we can see. I think the other is that we're really, it's very noisy data. I mean, I think if we look at this particular set of data that was just released, there were no unpleasant surprises. There were a couple numbers like the one you just mentioned that exceeded expectations. There were some that did not meet expectations. But I think it's important to look at the bigger picture here, which is that I think China's economic fundamentals are strong, and it has demonstrated a tremendous amount of resilience.
And certainly China is the biggest trading partner for something like 100 countries, but the US tariffs will of course have an impact. Retail sales rose 5.1% in April, and that missed analysts' estimates of 5.5% growth. China wants domestic consumption to grow, but how much of a challenge is that going to be?
Well, I think there's two issues here, Elizabeth. So one is clearly cyclical. Consumer sentiment has absolutely taken a hit in China. So the residential real estate market is one important factor. It's a vital store of wealth for many Chinese families. The trade war, of course, has had a knock-on effect. So I think this is one factor. There are structural issues as well. So China, of course, has relied on export growth, infrastructure investment to power the economic development over decades that have lifted hundreds of millions of people out of poverty. And I think it's recognized by the government that this does need to transition at a structural level so that there is greater sustainable consumption in the Chinese economy. But I want to briefly say, though, that despite all this, China's export performance in the last 5 years has gone from, I think, 2.6 trillion in exports to about 3.5, 3.6 trillion in 2024. So it's an increase of more than 30%, despite these very challenging conditions. So consumption is very important, but I think at the same time, it's easy to get lost in the noise that we see with monthly data releases, quarterly data releases. When we zoom out even just a little bit, I think we see that there are some powerful secular trends that will be difficult for the U.S. to overcome as it seeks to achieve whatever its objectives are vis-a-vis China.
All right, Andy Mock in Beijing, thank you very much for your perspective. We appreciate it.
Thank you for having me, Elizabeth.
Make sure to subscribe to our channel to get the latest news from Al Jazeera.